Hey, everybody, it's Eddie from Tokyo, and I have two very special guests with me tonight. I've been really waiting to do this interview for well over a month. I think they're ready. This is a big project. They're connected to a monster platform out there. And this is Fathom, and they are going to tell us what they're up to because it's fairly new and they're just getting going, and they've got a very interesting business model. So welcome, Manuel, Tyler. It's really nice to see you.
I'm currently head of DeFi at Currency, which is a blockchain infrastructure company. And I've been in the blockchain space professionally since 2016. I started trading at a family office. And in 2017, I moved on to a Swiss crypto exchange called Liquidity here in Dubai. Liquidity then closed down its international operations, and I moved on to Currency. Before Currency, I have a TradFi background. I worked stints at JP Morgan, Chase Manhattan Bank at the time, and Deutsche Bank. And after that, a JP Morgan spin-off called Risk Metrics Group, which was IPO'd in the New York Stock Exchange, and then bought by MSCI, which is a large fintech and data and index provider. And that's maybe a good segue into Tyler's introduction, as he has a slightly similar background.
Yeah, brilliant. Okay.
Yeah, that's a bit funny. Manuel and I both worked for the two largest index providers before joining up with Currency, which is quite a bit odd. But so I'm co-founder of Fathom. My name is Tyler Carter, also head of digital assets at Currency. Been with Currency for about a year. Prior to that, I built and then ran the commercial side of S&P Indices digital asset business. Did that for about 4 years. Really interesting to bring that project from sort of, bare bones, nothing, to launching over a dozen products really inside of that 4-year period. Got the opportunity to work on a bunch of industry firsts. We were doing not only digital asset ETFs, but also tokenizing things like the S&P 500 in a fund structure, which was really exciting, but decided I needed to move a bit closer to the innovation. So was really excited to join up with Manuel and the rest of this Currency team. Prior to that, traditional asset management for a number of years, focusing on the ETF side of things, and then got my start in crypto actually way back in 2012, actually testing one of the more prominent DLTs, let's say, and some of their actual integrated DEX features, which back then, it was not even really called, decentralized at that point, but certainly some parallels to what's going on in the burgeoning space right now.
Wow. So you've got really a tremendous amount of TradFi under your belts, and you were early adopters into the space too, as well. So that's, it's a rare combination, I think. So if you were to explain the business model, I really want to understand what it is that you're launching here.
Yeah, I think it's important to separate it maybe into a few different phases of development. But, the simplest way to do it, and we can, discard any of the DeFi or Web3 terms for a minute, and describing the MVP, which will be launching in December, is really similar to how you'd view like a checking and savings account function from a traditional bank. So essentially, you're giving your collateral, you're giving your assets to that bank. They then pool that with other users or clients. They go off and do a bunch of banking activities and provide you a return, which in banks, in a traditional bank's case, is quite low at the moment. What we're attempting to do, at Fathom is very similar to that, at least in the MVP format, in that we want to take collateral, first in the form of XDC, but then moving on to real world assets, whether that is tokenized gold or tokenized treasury funds, later on to other tokenized commodities and potentially tokenized ETFs and equities as well. We'll take that collateral, we'll go off and do our own set of activities, in this case, largely spinning up validators to proof and secure blockchain networks, and then pass a return similar to what a bank does back to those clients or users. And that's really the basic format of what's going on without, getting too jargony. We do have some more exciting stuff, we'll be launching next year that we'll talk about later on in the show, but I think that's the base level. description.
Yeah, I would just say also that, we really set out to really build a quite a comprehensive DeFi ecosystem that will benefit the XDC community first and foremost, and of course the XDC tokens. So the initial version of our protocol will give a lot of utility to XDC in that you can put your XDC into FATHOM and stake, and we will stake it using liquid staking and provide a number of sources of yield for people who have XDC and who want to make it yield. So liquid staking will be a large part of that yield. Then, of course, there is the borrower interest on the other side. Then there is, furthermore, we can DeFi farm it within our own DEX. So FATHOM will have its own DEX, but will also be connective with other DEXs on XDC, as well as, very importantly, as Tyler mentioned, the collateral itself, which apart from XDC, the other types of collateral that we will allow for might already have intrinsic yield. So, for instance, a tokenized loan portfolio as well. And then there will be, in the beginning, a little bit of incentivization as well for both depositors and borrowers to provide a little bit of extra yield in the first year. But so that was the initial goal, was definitely to give more utility to the XDC token and to really make this benefit the XDC community as a whole. We know, of course, XDC is very global trade and global finance focused, with a lot of institutional interest and participants. But at the same time, we will also be catering to these loyal retail investors of XDC.
Is there a range of yield that you can mention, or is it too early?
Yeah, I mean, the yield will be variable, so we cannot guarantee the yield, but our models show that we can generate between 7 and 8%, 7 and 8 to 12 to 15%. So let's say from 7 to 15% yield on FXD, which is the stable asset that the protocol produces, so which is linked to the dollar. So let's say around 10% on US dollar. But it's important to know that we will be using a third-party custodian, and that this will be a licensed custodian, of course.
Yeah, and likely several, right? So we view these institutional or major custodians as one of the biggest on-ramps. And we definitely see a lot of tokenization, or we feel a majority of tokenization is actually going to come through those pipelines. So that's actually a very crucial component. But users will definitely have their choice of a few of the major providers out there. The intent is not that this is going to be one-to-one backed with physical dollars. Mm-hmm. It's going to be an over-collateralized coin, and that over-collateralization is going to be coming not only from XDC, but also from the real-world assets that are tokenized on chain that we're discussing. So it's really just, I think, getting to nomenclature within the industry that's a bit more accurate or more descriptive of what's actually going on. And I think there needs to be made like a clear distinction between the USDCs world and then, what pure DeFi plays are doing like us.
So it sounds like more of a basket of assets.
That's right. So you could call it it's a crypto-backed token, but it's actually more of a hybrid-backed token, because it will be backed by, of course, XDC, and then perhaps later maybe some other major cryptos like XRP and Bitcoin, but definitely not in the first year. And then real-world assets, on-chain real-world assets. So, and then with a big preference for those assets to be digitally native, so to where the blockchain acts as the ultimate source of truth, so that they're not just a digital copy of some paper database elsewhere. But these assets will include things like credit portfolios, loan portfolios. They will include things like tokenized funds that one of our partners, WisdomTree Asset Management, has just tokenized a US Treasury fund using as currency technology. These will be trade receivables in the form of tokens, for instance, the Trader token, which is trading on XDC. These and then also, of course, the precious metals tokens like gold tokens. So we're talking to quite a few gold token providers, and of course we're interested in making the FXD as hard a currency as possible. So these will be the different types of collateral supporting the FXD token.
Yeah, it's funny to point out that gold becomes sort of the underpin even in these next generation financial systems, right? So history rhymes. But Manuel, I think you hit on a good point too. So you mentioned the wisdom tree approval, which occurred last week. You know, hopefully this is a watershed moment for security tokens, especially in the US, but worldwide. We certainly have plans to do, you know, a bunch more, let's say hopefully dozens by the end of next year for various partners. But that's sort of how, you know, the story of Fathom being originated, right? This is based on talks we've been having with institutions for, you know, 4 or 5 years, and all of them wanted or saw DeFi as sort of this new distribution channel. So distribution channel into DeFi markets, things trade differently, it hits a different user base. So Fathom was initially conceived to service those institutions while also bringing retail into the mix, really for the first time, sitting those two participants side by side.
Yeah, when you told me that earlier before we hit the record button, I was really happy to hear that there's going to be this bridge both to the retail side and to the institutional side. And the Trada group that are doing the tokenization of the invoices for the trade finance. Wow, yeah. So I can understand when you are looking at all those different assets to work as your collateral. There's a large selection out there, and it can be managed, I think, very well, because that sustainability is something that's really key to everybody right now. I think the awareness level is really high as to, you know, how is this going to be sustainable? Yeah.
Yeah, and a big part of that, sorry, Tyler, a big part of that is, of course, that we don't use the Fathom token in the capitalization of the protocol. So this is 100% different from the famous Terra Luna UST debacle. So it's purely using exogenous value assets to support the capitalization of the FXD token.
Yeah, good to point that out.
And we're going to be launching this labs entity so we can do more things like launch Fathoms. So Fathom's going to be a completely separate subsidiary, you know, not necessarily linked to Securrency, but it's going to be sort of birthed out of this labs entity that is housed within Securrency. And the idea is that, you know, it's sort of this rapid response, you know, team where we can be very agile and service the needs of sort of, you know, that cutting edge of right now Web3, but, you know, who knows what's the docket in the years to come, right?
Or in years to come, how about months to come?
Yeah, I forgot blockchain moves at the speed of light, right? So it's like a day's a year.
Everything we built in Fathom, which is the stablecoin protocol, the liquid staking, and the DEX, and later on next year, the lending platform as well. Everything will be on XDC and on XDC only for the foreseeable future, because as we all know, bridges are hard. And this week, BNB chain has been hacked to the tune of $600 million. So we're staying away from that till we have some very good solutions. There are, of course, interoperability solutions that we know about and that Securrency is working on that don't require locking assets in a vault that supports the bridge. There are you know, blockchain solutions where a third-party blockchain can act as a settlement layer. Some folks like Zeta Chain and Kimha, for instance, are doing really good work there. So we're exploring that, but that's only going to be for the longer term, so at least a year from now.
Yeah, the technology is still evolving, and so I think the bridges that are going to get less vulnerable, and I'm very bullish on the technology solving that in the future. So yeah, it's just a matter of, I think, timing for you, and cross-chain eventually is going to be really, I think, key for everybody in the system. So, but get the first thing done right, and then you can take the next step, right?
That's like our motto, but yeah, we
yeah.
definitely believe in the multi-chain world.
Yeah, I think everybody's coming around that way and sees the advantage, and the connection only improves liquidity across the board. So, but you gotta get your own camp solid and off the ground first. You just can't be everything to everybody out the gate. Well, some protocols are gonna attempt to go out the gate with some initial bridges, but I think it's good to take it slow and step by step, and make sure the technology that's being used is it is safe. How about liquidity? How's that going to? Yeah, just kind of curious in terms of getting in and out of these particular DeFi constructs. How does that look?
I think our base level of liquidity is certainly going to come from the XDC community. If you think about XDC versus some other proof of stake chains, they're in the mid 60s in terms of how much of that asset base is staked. XDC is significantly lower, so we see that as a good opportunity to service the community. We're hoping to drive sort of this base level of liquidity into the platform through pure XDC staking, and at that point we can start plugging in institutions who bring additional liquidity, but it is sort of this chicken or the egg question. And then in addition to that, we have been having some conversations with third-party liquidity providers as well to sort of assist the ecosystem, especially in the beginning stages.
In the way of maybe market makers, I would think, or something similar. Yeah.
Yeah, exactly. We will call liquidity provisioners, market makers. We'll call them the same thing for now.
Yeah, there'll be new terms coming up very soon too.
Sure, I'm sure.
And this is also where our relationship with this currency comes in, right? So we have great relationships with large financial institutions, both on the borrowing and the lending side. Companies like State Street and Wisdom Tree Asset Management, as we mentioned before, a US bank, sovereign wealth funds in Abu Dhabi, and others. And then XDC has its own relationships with large trade finance banks, for instance. So there will be, I think, a very thorough, very solid, I should say, institutional base to provide this liquidity, which will make it which will make it long-term liquidity, stable liquidity. And we're going to limit the number of pairs that we provide on the DEX, for instance. We're going to limit it to stable coins only. We're not going to have all kinds of crypto projects. So we're going to be very focused in making sure that we don't fragment liquidity, and that we keep the DEX really functional and aimed at supporting the wider protocol and the XDC community.
You chose the UAE. I'm just kind of curious why you chose to domicile there. I mean, I know from the obvious, but I would love to know, like, what's turned out to be the benefits, like you say to yourself, man, am I glad I did this.
So I'm based in Dubai. Tyler is based in New York, but we have him over here in Dubai quite regularly. And really, the reason that we are based in the UAE is from a currency decision. I would say maybe 6 years ago to be based here. The currency started in 2015, 2016. And quickly realized that it would probably be beneficial to be in a jurisdiction that is not the US, as well as the US. So yes, we engage constantly with regulators in the US, be it the CFTC, especially the SEC, the Treasury, FinCEN, and others. But things in the US on the regulatory side are, as everybody knows, quite fragmented. So many different agencies, and policymaking is not always as fast as it can be in places like the UAE and Singapore, etc., and Switzerland, Liechtenstein, etc. So it's really an historical currency decision to have that diversification in the base, and it served us well because, of course, we are here in a very good time zone where we can service both the East and the West, Asia, Europe, and the US. The regulators have been very progressive. They've come up with crypto asset frameworks that are, very open, very responsible. Things are not, it's not easy to launch some ICO here or some fly-by-night cowboy coin. But still they are kind of risk-based, and they they started with sandboxes and they've progressed since then. So I think it was a wise decision. And then it so happened that the XinFin organization also moved from Singapore to Dubai as well. So that was an additional bonus. And yeah, personally, I've been here 13 years. I came here with Riskmetrics, MSCI, and yeah, I love it here. The taxes are also, of course, a huge benefit. You don't pay income tax here. They will start at some point with corporate tax, I think, in 2024, but so far no corporate tax yet. And that just makes things a bit more easy as well.
Yeah.
And Manuel's certainly the Dubai expert, but coming from the States, I have to say there's a palpable crypto energy when you land in Dubai. There's a ton of projects that are there. It's very easy and everyone's willing and eager to work, or at least, have conversations to figure out how you might be able to work with each other. And it's funny, you're on the Emirates flight over, and there's actually you can't avoid crypto conversations on the plane. Half the people traveling from New York to Dubai are in crypto, and you're gonna have conversations about it on the plane.
So I'm gonna be transiting through in about a week. And I'm using that airline, so maybe I have to go with sunglasses on.
Yeah, hide. You gotta hide if you want to take a nap.
Yeah, I don't need to talk any more crypto. I think when I'm gonna take a break from crypto. So yeah, I definitely. So what should we let everyone know about that you didn't get a chance to talk about, that you really want to be sure that you communicate? Feel free to talk about something that you feel we've missed.
Yeah, definitely. So as you mentioned before, Eri, it's still a little bit early days for us, but as we're moving from MVP that we're now testing internally to our first release, which will be the Kermadec release, which will have our DAO in beta, which have the stable swap DEX in beta, where we'll be introducing liquid staking and be adding additional asset classes. We want, of course, the community to participate. We'll look forward to maybe coming back on your show and talking in all possible channels to the XDC community. Very important also, I think one thing that we didn't mention is that we already launched quite a few interesting tools on XDC. One is called Coral X, which is a very easy to use, very capable smart contract deployment framework. I think that could be of immense value to developers. So please check that out, Coral X. It's already launched, and then we're also very soon launching. We had a press release about that. Actually, we already launched it. Something called Digital Asset Composer, which will allow anybody. It's open sourced. It's all there on GitHub, which will allow anybody to easily create any type of digital asset they can think of. So including very sophisticated structured products, loan portfolios, waterfalls, you name it. And even as part of that digital asset composer, even allow people to launch their own DeFi protocols with very little or no code. So that's something to to try out as well and look out for and talk to us about?
So yeah, digital asset composer too. This is right. Almost like the way I describe it is similar to what Tableau does for data science. The idea is drag and drop, no code, smart contract platform. Like Manuel said, can rapidly deploy a variety of dApps directly into the Fathom environment. And the idea is that, we can cut development time, down to hours or days from months. And that, in particular for the XDC network, we can sort of see this flourishing of dApps and hopefully gain some ground on some of the other networks out there that have had, most of the projects to date. But when you think about digital asset composer, you think about deploying these new DeFi yield mechanisms. If you pair that with like an analytics tool, which is certainly like in our framework, you can live monitor market conditions and then rapidly deploy products to suit exactly that environment at that time. And then when Manuel was mentioning structured products, this is something, this is really something I started working on even back at S&P. We were thinking about how we can use tokenized ETFs, but shift the risk return profile. And it sort of is going to be done through using digital asset composer. But this is a sort of a phase 2 for next year. And the idea is that we can mint tokenized real world assets directly into Fathom, but pair them in a single token structure with a DeFi yield component. So if you think, yeah, really big stuff. So if you think about like the S&P 500 has a 7.5% on average about return annually, and we can do a 7.5 to 15% DeFi yield. And if we can package that, now we're shifting the return profile, double or triple. But in the event the underlying asset goes down, it also acts as a buffer strategy to the downside. So really exciting stuff, opportunity to do some things that haven't, been done in finance before. And we're, really looking forward to it.
Yeah, and to add to that, so I think what's also very exciting, one big thing that is missing in DeFi is really fixed income, right? All these protocols are producing variable fees, including the Fathom protocol. But with tools like Digital Asset Composer or third-party tools, anybody can build on top of Fathom to produce these kind of fixed income products. And that is especially good to do, given that given the proof of stake protocol that XDC is, we can set this. We have this risk-free rate, which is around 5%, which is also servicing the Fathom yield. So it is fairly easy using a Digital Asset Composer to now, for the first time, bring fixed income products to market. And so we believe that that is going to be extremely interesting for institutions, for brokers to provide to their corporate clients or their asset owning clients. And I think we'll really take this move from variable interest to fixed interest. Especially interesting now, of course, now that we see interest rates going up, we can get these higher yielding assets into the protocol as well to support additional fees. I think this really has now the potential to bring DeFi back from the existing 50 billion or so to where it was, 200 billion, and then, way beyond that into the mainstream, into the trillions of dollars.
This creative side of the DeFi and mixing with TradFi is just mind-blowing for me, and I'm sure you're going to have a lot of fun in this space with it, and I'm sure it's going to be very popular. And just think of the projects that are going to come and build in this ecosystem a year from now. I can't wait to see what has been created. Seriously, yeah,
we'll
very
have to
exciting.
do some.
Very exciting, guys. Thanks so much for making this kind of product available to everyone. And I really wish you all the best of luck. And I don't think you need the luck. I think the timing is perfect. And I think that regulatory clarity is coming for the United States. So just a little bit of time. In the meantime, there'll be lots of other opportunities out there. So yeah. Fantastic. I enjoyed it very much. And you make me more excited about this space when I hear what you're doing. Thank you for coming on to the channel.
Great. It was our pleasure. Thank you for having us.
All righty. Talk to you soon. Bye-bye.
Bye.